Hey guys, I want to start with something a little different here today. I want to address dealing with drawdown and do a little bit of trader psychology here today because it seems there's some pain happening out there on what is really a very predictable, nearly scheduled market pullback, guys. And I want to just discuss overpositioning, okay? Also, I want to be frank and open and honest. 3 weeks ago, I was up 209%, okay, on the year, and I'm now mid 170s. So I am in the middle of drawdown, okay? But if you look at my equity curve, it goes like this. There are drawdowns. It is a part of winning. Taking losses, or at the very least, surviving through drawdown periods is a part of winning and outperforming the markets. You do not get to just smoke these markets, all right? You have to allot for being mispositioned, mistimed, and just simply wrong at times and taking hits. But you have to protect yourself. You cannot allow the hits to take you out, all right? You cannot allow the hits to tie up your capital into these names that now, what if this period is more than a pullback? What if we go into a correction? Okay, that is possible. It very possibly could become a deep, maybe even multi-year correction. I don't know. I don't have a crystal ball. I don't think that's what's going to happen here right now, right? I think we're a little bit away from that happening still, but it could. Okay, we cracked today. And if you think about yesterday's watch list, we did exactly what I said I was looking for, the first stage of it. Now it is, do we go into a full-on correction? Okay, or do we bounce and get right back over the short-term moving average and back onto trend? If that happens and you got hurt or wiped by this pullback, you really need to reconsider what you're doing, okay? You need to build a better risk profile that allots for drawdown because you're going to be in it again. It's going to happen again, and you cannot be taken out by normal market moves. The markets pull back. Let's jump in here and look at the chart. Guys, we're pulling back simply to the prior all-time high breakout level for now. Yes, absolutely, this could get very painful and we could start doing something like that. But for right now, all we're doing is exactly what I said yesterday, and frankly, since the breakout, for the last week at least, I've been saying a pullback to retest prior breakout level would be healthy. And it would be when I position. If we hold it and remount the short-term moving average, it would be when I position into the next move of the leaders. We were expecting this, okay? And the fact that we are in drawdown is okay with me. I'm in 75% cash. Okay, that's another reason why I'm off of my highs is because I had to take some positions off back on this crack, right? But I'm in 75% cash. If we get this deep retracement, there's multiple levels here that we can look for a reaction. We have prior all-time highs. We have the 50-day moving average. And then we have the midsummer all-time highs down here, still above the 200. Okay, and if we switch over to the weekly, look at how, guys, come on. We're not even close to truly breaking the structure of a bullish trend. I hate to see people in pain, right, and getting hurt by normal drawdowns, and that is happening because you are over positioning, and you need to learn to build out a better risk profile that allots for normal price action. Okay, listen guys, I run a 60-day one-on-one bootcamp where you work with me directly, and the first assignment you submit is your journal and risk profile. The journal is it's a way of me to get to know you and your ambitions with the market. Are you long-term think? Are you in accumulation phase? Are you trying to make an income? What's your experience? Tell me who you are. But the other assignment from the very first day is submit to me your risk profile. Okay, and this is something that we're going to work with as you learn the models and roll into trading. But from day one, risk management is everything. And if you stick to it, you will be fine. Okay, you will have room within your portfolio for normal pullbacks in the market. Better than that, I teach you to read market breadth. Please go watch my video from yesterday if you didn't, where I said exactly what is happening, was likely to happen. Okay, I don't know if it's going to bounce or roll over yet, but I said we're looking for a pullback to prior all-time highs. Okay, you need to learn how to manage your risk. You need to build a risk profile, and you need to learn how to read market breadth so that you know when to lean in and walk it back. Okay, sit on your hands. be in a cash position because we're expecting a normal, healthy pullback in the market because there's underlying weakness throughout the sectors, market breadth, all of the things. Go watch yesterday's watch list that we talked about was signaling caution. Okay, and it has been for weeks. So frankly, any watch list from the last week or two, go watch where I've been talking about this coming and that we needed it because pullbacks, macro pullbacks, are what put our leaders onto sale and bring them back below their short-term moving average, where we look for Wall Street to step in and position. They don't buy the tops. They wait for pullbacks and then they DCA in to the leaders for months and years. Every time these things pull back, that is literally the triple R setup: retracement, reaction, remount. Well, the reaction comes because it retraced. It is a leader, a strong company in a trend backed by growing fundamentals, revenue growth that Wall Street likes. This company has gone on sale because of a macro pullback. It has nothing to do with the growth of this company, has nothing to do with the fact that they just reported blowout earnings, right? It's pulling back due to the macro environment, a market pullback. 3 out of 4 stocks follow the market. The market is pulling back. It allows our leaders to go onto sale. And when we see positioning and it remounts the trend, okay, that was Wall Street. Retail doesn't push this thing back onto trend or back above the short-term moving average. Okay, but when you see that happen, that's how you know they just positioned into the leaders. And if you align that with when the market does the same, the market remounts that short-term moving average, you have Wall Street at your backs. And this is the sort of thing, if you are struggling in the market and you can't stop pushing buttons, just do that. I can't go watch all of my stuff. Every single day I'm talking about the same thing. I'm saying wait for a retracement, reaction, remount. If you can't do that and you're losing money and you're struggling and you're pissed off at the market, I don't know what to tell you, okay? Just do that. Learn patience. This isn't a fucking game, okay? It's just not a game. Stop pressing buttons. Wait for the retracement in the leaders. Wait for a macro environment to give you a retracement, reaction, and a remount. And then buy the frickin' leaders. It's that simple, okay? And understand you should not be over applying leverage at any given time, especially anywhere near all-time highs, to where a little pullback to the prior all-time high level has you freaking out or getting hurt. That's on you. Okay, you've got to better manage your risk, period. And you need to learn to read market breadth so you can see this shit coming, all right? Because this was predictable. I predicted it for the last week very heavily yesterday. Go watch that video. So, guys, I apologize to be a little blunt there, but sometimes it's just what you need to hear, all right? If you're getting smoked right now, you were overpositioned in a time where it was very predictable to get this pullback to prior all-time highs. And we're sitting right around that area here in overnight trading. And as I was mentioning, that I don't really hate the idea of it slightly breaching that level, but I want to see it very quickly get back over. Okay, so we want to make sure that that happens. We're not spending too much time below. If we do breach that level, all it is filling that gap, and I want to make sure we get back over the prior all-time high and over our short. This is the 9. If I'm drawing that over, that would be the short-term moving average. That would be a triple R trigger right there on the indice. And this is something I've been saying I would very much like to see. If that happens, I'm going risk profile B+ to A, and I'm going to do triple R triggers on my leaders. We did it here, 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 and here. All right, this is something I will never stop doing. Okay, but the other thing we need to pay attention to is, do we get a deeper retracement and make a lower low here, whether it be this area you're looking at or here? These are the levels I'm paying attention to. But if we keep rolling over, right, we want to see if we make a lower low and a lower high and things just start to get nasty. That is the other scenario. It's either going to be this or it's going to be this. You need to be ready for both. Do not be over positioned in case it's this, and we need to maybe roll into a bearish tone towards end of year. But I find this to be the more likely scenario currently. We will have to see. But guys, what is happening today and overnight and yesterday was predictable. It is normal price action. Let me get all of this stuff off of our charts, and we just want to make sure that we are continuing to watch our levels. Prior all-time high, do we get right back above it? Okay, and below that, this is our most recent low. We want to watch that level, and below that, this is I would say the first line in the sand, which probably aligns with the weekly. Yes, it does. Okay, look at that. So we just want to make sure we're up above this second blue line, 652 area. All right, if we're above that, then guys, we're fine. Okay, we're pulling back. Okay, we are totally fine. If you look at the monthly, everything is still fine. Doesn't mean it won't change. Doesn't mean things can't get very, very ugly very, very fast. But we're not there yet. Currently, we are in an expected, healthy pullback to the prior all-time high breakout level. And let's see how we act off of that level. We can't be too predictive. All right, we have two scenarios, and we're going to be reactive. All right, if we bounce off of this level, we're back on the trend, and we need to be buying the leaders, okay? If it breaks down, then we'll talk through that should it happen. RSP, I was talking about this yesterday quite a bit. I do not like the look of the RSP, all right? This is something that has been concerning and a reason why I've been warning you guys of breadth for weeks now. As the SPY has been doing this, right? RSP was doing this. That is a bearish divergence or negative divergence, okay? Caution. That was something I've been saying for a couple of weeks now. And then IWM, same thing, guys. We were beginning to roll in the IWM as the SPY was pushing higher. We did not have anywhere near full market participation. Another thing we were monitoring was these charts here. And this is the stocks above their 50 and 200-day moving average, right? And we're in a downtrend, okay? There are less and less companies above their 50 and 200-day moving average. That is, as the SPY goes up, that's a bearish divergence. That's a negative divergence, okay? Caution. We've been saying this. We've also got this here. We've been spending too much time below this zero line on the high-low index. Stocks making new highs versus new lows. Okay, if you look at the last nasty time in the market right here, that aligns with this right here, okay? A time where we started spending a lot of time below that zero line. It's beginning to happen, okay? Warning, warning. It does not mean it can't turn around, but it does mean that you should have been doing quarter to half size, if anything at all, for the last few weeks, which, guys, everyone in Bootcamp, you guys are fine. But, a lot of people are watching this channel now. For me, like, dude, I started this 2 months ago. The fact that I'm getting 50 to 150 views on every video, thank you. That's fantastic. Clearly, this is resonating. Even with some of the feedback with the new people coming in, this is resonating, okay? And frankly, I do know what the fuck I'm talking about, okay? Pay attention, guys. If you're watching me regularly, which it's very clear to me, some people are, you're in the shadows. Thank you for being here, all right? But pay attention. I've been warning you guys of this market breadth for a while now. Let's look at one more set of charts here. We'll look at market internals. And again, another one that I've been showing you guys this here for a while. This is caution, warning, warning. The tick has been below the zero line. The up-down volume below the zero line, okay? The advanced decline below the zero line. Guys, come on, man. There are more sellers in the market than buyers, and it has been that way for over a week. Okay, at all-time highs, when we don't have full sector participation, we're being led by semiconductors and big tech. Everything else in the market is selling right now. I've been telling you this for a while. Again, I know you guys in Bootcamp, you're fine. We're going to get into this more deeply here tonight, where I talk about positioning and longer-term ideas and what to do if we get a really major market correction. But guys, those of you hanging out in the shadows, man, like, hey, look, dude, say something in the comments. Hit me up on email, all right? warrensnacks@gmail.com, all right? Email me, dude. If you got questions, I'll talk to you. Of course, come to Bootcamp if you really want me to lean over your shoulder and teach you how to see this shit coming and not get hurt. Obviously, a lot of people out there are right now. So guys, I do have a couple of charts that I'm willing to look at here if we do get the reaction out of the market, if we get right back onto trend today, tomorrow, the next day, right? I really like Dave, their earnings. Okay, below out earnings. This is a macro situation here, right? They tried to get going, but the whole market sold off. Dave is going to be on radar. I don't know exactly where I would like to enter. It's something I'm just going to have to be watching. Where does this thing open today? But, you could look at this 262 as line number one. All right, this is the first level I'm looking at, and we're just going to have to see where price opens and reacts around it. But I expect this to get pretty squeezy. It's a low float stock, major earnings beat. I expect this to squeeze up. One thing I want to say really fast that I did mention yesterday, guys, please go watch yesterday's market breadth video. There is nothing but alpha in that, right? I literally articulated everything that is playing out so far, right? And you need to, if you're in the shadows and you're listening to this, sorry Bootcamp guys, where this becomes repetitive. But you need that repetition, right? You need to hear me saying these things over and over and over and over again because things repeat in the market. We can plan for scenarios and one of them is going to happen, okay? Like there's nothing too surprising. You just need to know how to read, look under the hood, read breadth, and plan for the different scenarios. But one of the things that I said yesterday in the watch list video was that we really need financials and healthcare to be a part of a move higher in the market, right? It can't just be tech. It can't just be tech and semis. We need the second and third largest market cap sectors of the market along with a push higher, or it's not going to sustain. We'd like to see even more than that. But those are the three I would really love to see. Healthcare has been lagging, so you could argue you don't have to have that in a push higher. But we need financials making new highs. We need communications making new highs. We need tech making new highs. All of these things in tandem together. Crypto, like just risk on appetite. We need it all, right? If we're going to keep pushing, otherwise we're going to get a pullback. And this is something that happened. Anyways, guys, this is the financial sector right here, XLF. And I said yesterday that this is looking nasty. Okay, I'd really like to get it back into range. And while the rest of the market sold off yesterday, look at this. We actually saw a little bit of strength in financials. That is nice. That is nice if it sustains, okay? If we get follow through, if it gets back up into range, gets over the 50, okay? Whatever it looks like. But if it gets back over this 50 and headed towards top of range and breaking out, guys, the market's going higher because tech will be doing the same. Tech always seems to be making new highs. But like if financials does it, come on. If financials gets on the train as well with tech, and then we've got healthcare, which let's just look at it real quick here. Look at this. Healthcare was strong again yesterday. This thing is still holding structure. Not a horrible look. While there's a lot of negative breadth out there, the three top sectors are starting. Well, yeah, you can't say that about tech because tech finally did roll over, right? And that's a big part of why the market is pulling back. But dude, it's pulling back to prior all-time highs. It's okay. If it does this, and this 9 EMA has rolled over to that point, you better be buying tech on that move, okay? That is a triple R trigger on this sector. You should be buying the leaders that align with that same move, okay? It is that simple. That is a fucking money printer. That is how you make money, okay? Wait for the pullback, retracement, reaction at or around our level. What's our level right here? Prior all-time highs. Remount of the short term. Right here, the 9 would be around this level at that point. If you remount that short term, it got bought up and pushed back onto trend. It's that simple. What else are you doing, right? If you can't do this and make money, I don't know, guys. Like, come to my boot camp. This is what I teach you. I teach you 6 different models that outperform the market. 5 of them are continuation patterns on the leader. My bread and butter is triple R. It is all you need. The triple R setup is all you need to outperform the market. Okay, as far as a model goes, you still need to learn how to manage your freaking risk, and you still need to learn how to read market breadth. Okay, come to boot camp. I can help you. I love this shit. I would love to help you, and I can. All right. Look, guys, I don't want to turn this into the longest video on my YouTube channel. All right, we're looking for a retracement, reaction at around our level, and a remount here of the 9 on CRDO. Guys, make sure that we're aligning it with that same move and the SPY, okay? We need the SPY back over the 9. If the SPY remounts the 9 after a retest of all-time high, risk environment B plus to A, okay? We're going to take some of these things that I'm talking about here. AVGO. Triple R trigger possibly here on AVGO as we pull back due to macro environment, okay? And if we get a reaction at around our level and remount that 9, we're going to buy that. That would be a trigger, okay? And if we can align it with strength throughout the market, then it's very likely we would take that position, have our swing low be our stop, and then we set a 2-to-1 off of our swing low right there. This is a money printer, okay? If you align it with the market, triple Ring as well, this is very likely to work. Simply, it works more often than not, okay? Go look at any of the leaders in the market. Triple R triggers work more often than not. It's structural. It is how it works, okay? When the leaders go onto sale, they step in, they buy them, they get them back onto trend. All right, it's that simple. You're overthinking it, okay? If you can't just stick to a model that makes you money, and I'm showing you this, and you guys have been hanging out for a little while, you're overdoing it. You're come to boot camp. I don't know what else to tell you guys, man. I want to help you. All right, Palantir pulling back into the prior all-time high. I mean, look, fuck, dude. This is literally the line that I drew. Okay, this is the move that I said to look for from Palantir. We'll see what happens. Does it react off the level and start to trend back higher and get over the 9, which would be right where this circle is? If it does, and the market is triple R triggering as well, it's free money. Dash, I like on the weekly. I believe earnings is today, tomorrow. Yeah, tomorrow. All right. If this triple R triggers right at all-time highs on the weekly off of a positive reaction to earnings, and we get that triple R trigger in the market, right? Full sector participation, dispersion into the different sectors in the market. Guys, if this freaking weekly triple R triggers are at prior all-time highs on Dash, something that I trade all the time, yeah, I absolutely will take this. So this is high up on watch. HEMS I like on the weekly as well over the 9. We're getting the macro pullback. We had earnings release already. We're not getting a big breakdown. No overly negative reaction to earnings. Frankly, we're holding up. And if we get a reaction off of our level and a remount of the 9 on the weekly, could be a great entry for you there on HEMS if the rest of the market environment remains stable. And we're going to look at net. And guys, this is what I want to talk to you about. Okay, this was ripping. Okay, they blew out earnings, and this is pulling back due to macro into our levels, into prior all-time high levels perfectly. Okay, if we get a reaction off of our level and back onto trend, free fucking money. I don't know what else to tell you. I don't know. All right. And then Roblox is one that I just want to keep an eye on here on the weekly. Okay, this is nasty, I will say. But listen, this is one of the best companies over the last year or so, and it really hasn't given much opportunity to get in before it just went sideways and got choppy at that all-time high level. If we can get a reaction here on the weekly and a remount on the 9, I might be interested in that. It's going to stay on the radar, right? I've not traded Roblox, as you can see, for quite a while here. It's something that I've wanted to get back into. It was just too tough, right? Even if you go to the daily, like, I mean, you could say there was a triple R right there. I didn't take it, obviously, but, you know, I mean, that was a clean triple R right there for sure. But, you know, all this stuff was just a bit too choppy for me. I didn't love it. I was waiting for a breakout in the first pullback of that to get in. But anyways, guys, we're getting a rollover off of earnings and not the best reaction. I haven't listened to the call or figured out exactly what's going on right there. But price action is king. If we can get a weekly trigger, I'll probably be slightly interested in that. So we're just looking for Wall Street to step in and to identify their level that they view worth defending. All right, is it going to be right around 100? Maybe, we'll see. But we should know if they step in and defend a level and get it back onto trend, that would be where they viewed this as on sale enough to begin positioning. All right, so I expect that to come. You know, you really think this guy's going to just roll all the way over? I think it would take like a market correction or crash for that to happen. Anyways, guys, Roblox is on the radar. Not my favorite. I prefer Dave, CRDO, AVGO, Dash. Really like. HEMS looks pretty good as well. But look, guys, I hate to get too ranty, and I don't mean to upset anyone or ruffle any feathers. I understand drawdown is tough to deal with, but you need to learn to deal with it because it happens and it is coming again. You need to learn to manage your risk properly so that it is not something that you fear. You are prepared for it and you look at it as opportunity. If this happens to be a macro pullback that sets up all of our leaders again for another triple R trigger, that would have been an opportunity, okay? That's how I look at it. And then I know that 100 and mid 170s on the year is going to very quickly go back into the 190s or low 2s. And then, like, guys, it's part of the game. We're waiting for this. Retracement, reaction, remount. Remount is when we make money. Retracements happen. It's a part of the game. Manage your risk a little bit better if you're getting hurt. Come to Bootcamp, guys. I would love to help you build out your risk profile and learn to read market breadth because it is your only chance at seeing these sort of things coming and adjusting your risk parameters accordingly. Guys, stay safe, manage your risk. Let's go make some money. I'll see you soon.